let's bring in Jefferies chief market strategist David Zervos. David, love to just get you first, sort of your response to what you heard from Goolsbee and Sarah's analysis as well. Do you agree?
I largely agree, and you also had, I think you also had Barkin on earlier today too. So you had two Fed speakers that are important. I guess my takeaway is not that different from what you guys have been talking about today, that I think there's a very calculated, relatively slow rate cut desire. But I was taken by Goolsbee's comments, or Austan's comments, about the supply side. He really pushed on this supply side story, saying that what we saw with the negative supply shocks and the creation of inflation were a lot of follow-on effects. They'd hit in one industry, go to another industry, go to another industry. And he sort of talked about the reversing of that, which opens up the door that maybe some of these sort of positive supply side surprises, which have been the real story of 2023 that have created the lower inflation, have some more knock-on effects. So I think he's still looking for kind of a Goldilocks outcome for a while longer based on that view. And therefore, I don't think there's a big rush to do anything, even though, he is talking restrictive, and worried that they might make a mistake on the other side. So he had the typical economist on the one hand.
On the other. Makes it fun. David, here's the thing. They don't know when they want to start cutting, and the market doesn't really know when the cuts are going to start because we just don't know how the data is going to shake out. On the, this hotter inflation January, I think, threw the market for a loop, and now we wonder if it's going to stay stubbornly high, if it's going to tick up a little bit more, if there's some sort of acceleration building in parts of the services economy to start the year. It just feels like we have these big question marks, and we have to wait for February and March data.
I think that's probably right. And the PC was probably a little bit better news, or at least not bad news. So that was good. And you pointed out, Sarah, the prices paid index today was lower. So that was good. And certainly the expectations data in Michigan were okay. So I think we're on the right track. We've fallen from 9% inflation to 3.1% inflation over the last 18 or so months. It's been a big move. It's been very positive. I think everybody's feeling very good about it, whether it takes a little longer to get on the trajectory that they're happy with cuts for. I don't know. But I come back to kind of our views that we put out at the beginning of the year, which is that it doesn't really matter when they go or how much they go. The reality is that they can go, that there's a backstop in the market. If things get really messy and there's a shock of some sort, whatever that is, geopolitical, environmental, viral, all those things, we can respond again. In 2022, the Fed really couldn't respond to anything negative because they had to fight this inflation battle. So it's not a kind of if they will cut, it's that they can cut. And I think that's a very supportive thing for the market. It's an insurance policy that we haven't had in a while.